Silver's scarcity. What will happen to its price? And this tweet from Bob Coleman: we may be seeing the beginnings of a big short squeeze in silver. The cost to borrow SLV has skyrocketed over the last 2 weeks. I went through much of this on the Spaces event with Palisades Radio in my presentation at the Silver Symposium. And I'll put a link in the description below to that video that he was talking about. It's 2 parts. You can see here nearly 3.5 hours of viewing, and I highly recommend watching it. Not just what Bob had to share, but also Keith Weiner and especially Tom Luongo. And here you can see from this chart, and we'll have a look at the commercials position in a second, but they are net long silver. But there's also a very large short position on the silver ETF SLV. But the costs on that to borrow shares has surged to 4.6%. So here you can see from this chart, when the commercials were net long at the end of May 2019, before the silver price took off, the SLV short positions were only 13 million versus 51 million today. Yeah, very interesting. Something big is happening in the silver market. And Bob here makes a really good point. So the argument that the SLV shorts are due to arbitrage is troubling due to the discount to net asset value that has existed as the volume of short volume has been growing. And you can see in this chart, the SLV premium discount to NAV over the last month. Yeah, where is the arbitrage to short at a discount to NAV? Very good point. Very good point that I wasn't even thinking of. And silver continues to be drained from the COMEX and LBMA vaults, with August withdrawals coming in at around 44.5 million ounces. And here's a chart detailing the monthly changes in their combined holdings. Notice that in 2021, shortly after the silver squeeze began, there was a huge pattern shift. And here's a chart of LBMA silver inventories, which dropped another 3.6% last month as the silver drain continues. And remember, a significant portion of this is allocated to ETFs like SLV. And remember, the LBMA said that these figures provide insight to LBMA's ability to underpin the physical over-the-counter market. Well, that ability is falling. And I'll put a link to the LBMA's report there, which you can see that this is now at the lowest level since records began in July 2016. And silver holdings now total 28,500 tons, having fallen every month for 9 months now, which you guys have seen. And just to reinforce it, here's a good chart showing the LBMA silver holdings from Chris Marcus, who shared this. And 27 billion worth of short CME contracts. Note this represents positioning as of the 26th of July. Is its largest since mid-2018 when the Fed started accelerating its hiking cycle. That previous peak is 33 billion. Interesting chart. So to kind of sum up what's going on, what I've just shared, I just want to cut to a little 2-minute clip from Rob Keents from GoldSilver Pros, and I'll also put a link in the description below to his full video. And then after that, I will share with you guys 2 ways this silver scarcity will ultimately be resolved.
The industrial demand is really strong right now, and that's where most of the inventories are being drained. But some smart money has gotten in saying, wait a minute, we think silver is going to kind of go to the moon. You saw that with the $50 million order through Miles Franklin. Andy was on our program first time divulging that. There is demand from big people in the silver market, but the small people haven't gotten in, the generalists haven't gotten in just yet, and enough of a way to fully bankrupt the system. But we think when there's a crisis, It won't just be the smart silver stackers. It will be everybody coming in, the generalist funds coming in, and they're going to come into physical because SLV is not going to be able to handle that demand, as we saw in February 2021. They're going to buy a bunch of shares of SLV. London's going to report no silver, and then the run's going to be on for the rest of the physical stocks. People are going to go get the 1,000-ounce bars on COMEX. They're going to go get whatever retail they can, and it's going to be drained. And we're getting to the point where there's not enough inventory. Remember, we went down from 160 million free ounces on COMEX to 47 million ounces I showed you today in the span of about a year and a half. And that's with behind the scenes, the smart money buying silver, you guys buying silver, me buying silver, industrial silver. What happens when people freak out about a banking crisis or something along those lines, and they go to silver en masse? The generalists get in. They're going to hit the generalist ETFs first, and realize that doesn't work, and that doesn't give you real exposure to the physical. And then there's going to be a decoupling from those funds in the physical, and then people are going to go to the physical, and they're going to drain what little is left. So part of silver squeeze is not just the original thrust. That's the awareness stage. We're talking about awareness, people going to SLV. Then people start figuring out how the market works, and they start going to physical. And then once all that's dumped behind the scenes and it's gone and there's not a lot left, the next crisis that comes, people want to get in. The generalist wants to get in. They can't find it. That's where silver pops. Boom. And so we're in that sort of fade stage where people don't see the behind the scenes COMEX stuff unless they come to this channel, or they look at Rafi or look at Michael, who are now reporting the same thing I've been reporting for 2 years. Then you'll see it. But if you don't come to one of those channels, you won't see it. And so the general person is not aware.
All right, so let's check out this article. It's only a short article from Keith Weiner. The price of silver hit a peak of over $26.50 on March 8. It spent about a month and a half breaking down, and then the bottom fell out. It's currently down from that peak almost $8. I love that terminology, bucks. Growing up, we used to say it all the time. Hey, mate, you got $2. Anyway, let's get into it. Breaking down fundamental silver prices. However, the opposite has been happening to silver's scarcity. First, let's look at a chart of the silver market price and the silver fundamental price. The market price is down a lot since that peak, but the fundamental price has moved sideways and is now the same as on March 8. Now let's look at what the silver basis and silver co-basis are showing. There's been a big run up in the co-basis, i.e. the measure of scarcity, since August 8, and it has hit almost zero, which is in line of demarcation of backwardation. This chart, by the way, shows the continuous basis and co-basis. This is not the near contract, i.e. December, which hit a co-basis near 1% on Thursday. The continuous basis is a smooth 6-month average duration synthetic contract, not subject to the volatility caused by contract expiry, which often manifests as a temporary backwardation. Our remarks, we haven't seen a co-basis like this in at least 7 years. LIBOR rates in silver, but it's much bigger than that, much bigger. That's because the interest rate is higher now than it has been since November 2008. Now, LIBOR is on a tear, then it was collapsing. To carry metal, a bank's first step is to borrow dollars, and it buys the metal and sells it forward. So the basis is closely tied to the interest rate. When the interest rate is moving, we may find it more useful or more revealing to look at a chart which takes interest rates into account. It turns out that we do have such a chart. It's the lease rate, which is LIBOR forward rate. So here is the silver lease rate graph. The lease rate, which is another way of looking at scarcity, is higher than at any time since the thick of the global financial crisis in October 2008. At that point, silver was trading under $10. 2.5 years later, its price quintupled to about $50. There you go, I used that term. I had to get it in. So silver's scarcity and the future. Will that happen again soon? Well, we don't know, and neither does anyone else. But we can say with certainty that its scarcity has become serious. This could be resolved 2 different ways. One, it could be selling of physical metal combined with a let up in buying. Or 2, the price could shoot up. We think this is a good time to place a bet on silver. And we do too. With these lease rates and backwardation in the silver market, we think a price move to the upside, a significant price move to the upside, is close. And with commercial bullion banks, which have become net long last week for the second time in history, And then we've got the big shorts on the SLV, which are the speculators who believe they can beat the commercial banks. So we've got this battle between the speculators shorting the SLV and commercial banks who have now gone net long for only the second time in history. We think something big is happening in the silver market, and we think that it's a good time to place a bet on silver. So I've ordered some more physical silver. I picked that up this afternoon, and we've also been adding quite significantly to our silver stocks and our silver explorers. And some of our explorers have actually been starting to make some big announcements, some real high-grade drilling results, and those stocks are starting to move back up again. So if you guys, this brings me to reminding everyone about Finance Uncut Insiders. So if you guys are interested in seeing our portfolio, all of our investments, all of our assets, all of our research and analysis, why we're buying, why we're selling particular stocks or particular asset classes, then send me an email to the email address below if you're interested. If you want a sneak peek of that, have a look at my last video. I'll put a link in the description below. But as I said, it's a weekly report of our portfolio, all the research and analysis. Any changes we make to our portfolio will be in that report, so you can see all of our investments and all of our trades. For $365 US for an annual subscription for a weekly report, we are discounting it 30% off, so it's $255.50 for this launch. Send me an email if you're interested in receiving that. We are very close to that minimum number of 200 subscribers that I mentioned. We are very, very close. So if you're interested, send me an email to the email address below. So I just want to finish this video by sharing this with you guys. And you guys that follow this channel will know that I talk a lot about my beliefs that we're in an inflationary decade ahead. However, I see a 1973-74 style event happening, i.e., we've got this debt bubble. Not that we had a debt bubble back then, but we've got this debt bubble today at a household, corporate, and even sovereign level. And with interest rates rising, that is going to prick that bubble, and we're going to see asset prices, especially those that have been pumped up by new credit, or the credit expansion, i.e., this is really the Austrian business cycle theory and what we call the crack-up boom. We're going to see asset prices fall while CPI remains elevated. And this is why I hold, as a percentage of my portfolio, physical gold and silver. In fact, I've never sold my gold. Yes, I've sold silver before. I've traded it, and I've done videos on that. Wealth cycles, where I exchange my silver for other assets and so forth. But I just wanted to share with you guys this. This is why, no matter what happens, and if that debt bubble crashes and we see banks failing, there's a big chance of that. I want to hold some gold and silver. This is a promissory note. It is a promise to pay at some point in the future. When you use one of these to purchase goods, all you are doing is exchanging a debt with more debt. The banks that issue these promissory notes charge interest for doing so, which you pay for with your income tax. Essentially, your labor is used as collateral on the debt. The government owes the banks for lending them their notes. By pumping this fake currency into the economy, it creates inflation, which devalues your spending power. I tell a lot of people, have you ever heard the term a $20 bill or a $20 note? Hey, buddy, you got a $20 note? Hey, buddy, you got a $20 bill? That's what they are. They're debt. They're a note. They're a bill. They're a bond. Anyway, guys, if you like this video, please do us a favor and hit that like button. Love to see your thoughts and opinions in the comments below. What do you guys see in the silver market? Do you see something big happening? I do. And therefore, I want to make a bet on silver. Anyway, guys, take care. I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.